Welcome to the Gain in 60 Seconds Fastcast. Thanks for tuning in. I came across an interesting chart that shows the relationship between the yield on the 10-year treasury and the forward PE ratio of the S&P 500. The dark blue line represents the inverted yield on the 10-year treasury, and the light blue line corresponds to the 12-month forward PE ratio of the S&P. The relationship appears to support a fairly rational thesis. When interest rates decline, the future value of cash flows rises and pushes equity valuations higher. At least that was the case until earlier this year, where, as you can see from the chart, the relative correlation begins to diverge. As rates have continued to rise or decline due to the inversion on the chart, the historical correlation would suggest that the S&P should have declined as well, which until recently has not been the case. With the Fed now hinting additional rate increases are off the table, it will be interesting to see if the yield on the 10-year begins to climb back in line with the S&P, or if S&P earnings will fall, bringing it closer to the yield of the 10-year Treasury.